Hello guys and welcome to another post-market analysis of Bank Nifty. Today is November 15th and this is our Bank Nifty's candle. The last candle that you see here is today's price action of Bank Nifty on a daily time frame. So on a daily time frame, we have this zone marked from many days, and this is a very crucial support level which was broken, and then it acted as a resistance. And on Muhurat trading, we have seen a small gap up opening above this area, but it failed to close above that area. So today, market has given a gap up of around 500 points, and then from there market didn't even try to go 1 point above that level, but instead it has shown us a bearish day and it has closed in red. So this level again is going to be very crucial. So if you see any pullback to this level, and if you see any good bullish pattern candle patterns, then we can assume that the Bank Nifty has changed its direction towards the upside, and on upper levels we can expect market to go till 44,500 levels. But for that you need to see a very strong price pattern forming here, with a good with this level as a strong support. Or if market is anywhere between in this zone, that is least interested area to trade, that should be least interested area. And if it closes below this, if that shows us this, if it closes any level below this, that shows us that this is a failed breakout, and once again we can expect Bank Nifty to move to the lower levels. So now that's it on a daily time frame. And also one more important point here, this is going to be a very important swing high, because that is the point levels from where the Bank Nifty had started to move down very rapidly and broken this support area earlier. Okay, so while prices going towards the upside, this is definitely going to act as a resistance. So we need to keep that in mind as well. Now let's dive back into our intraday chart, that is our 5 minutes chart, and then see what we can learn from today's price action of Bank Nifty. So here we have the Bank Nifty's price chart. So initially we have seen a great moment towards the downside, but after that pretty much it was absolutely flat and sideways market. So whenever you see, remember this, whenever you see a huge gap up opening on a Bank Nifty expiry day, you remember that most of the people will get tempted to book their positions because they have seen a huge profit. Those whoever have are maintaining their positions with the call positions, they are definitely going to book their profits and then wait for the next week trades. So that is what has happened here. See, Bank Nifty has opened at 44,400 level, after which the single candle of the Bank Nifty has seen a price action of 200 points. That is very huge. So in this particular candle, Bank Nifty has opened there, and from there it has traveled all the way down to 44,200 levels from 44,400 levels. And it couldn't sustain this low of 44,200. Instead it reacted so quickly and then given a close of 44,300. But still this was 100 points of moment. Immediately after that, again you have seen a candle, but this itself is a huge hammer. So this itself is a very huge hammer. Whenever you see a very big range in your first candle, then you can expect a sideways momentum for that day traditionally, and that is what has happened here. But it has come down and then given us a price momentum towards the sideways. But also whenever you know that the it is an expiry day, and whenever you see that the Bank Nifty has such a big gap up opening, you always look to enter, get into this downtrend. But where do you ideally enter into this downtrend? Very simple. We have a harami pattern here. This is an inside candle setup which is also called as harami pattern, where your current candles, that is this green candle's body, is completely inside your previous candle's body. This is called a harame pattern. So whenever this pattern happens, it is either a reversal, or if reversal fails, it is going to be a trend continuation. So before this, if that is your level of your harame patterns low, so before this, what was the trend was towards the downside. And when you see a breakout at this level, when you see a breakout in this candle at this below this level, then you would have safely entered into that trade, keeping this above line as your SL, and then trailed it towards the downside uh, until you see a hindrance or a hurdle in this direction. So this way, this is the point on the left side where we are seeing a huge rejection. So that would have been the target, and this was this line which is red now is going to be the stop loss. By looking at it, we know that it has a very great risk versus reward ratio, and we know that it was a very huge gap up opening, and we have seen that kind of a momentum. But it is always safe to trade with a smaller quantity, because your initial candle is extremely having a high range. This candle is itself having 200 points of range, right? So after this, you can see what has happened is Bank Nifty has very well performed well according to this setup, and then all you should know is this Harami patterns usage. So what has happened at around 10:50, we have seen the Bank Nifty has reached to our target levels, and we have seen a momentum of 121 points there, which is very good. But don't worry to excuse me with this. Okay, so now don't worry to hold your position beyond that, but still if you want to hold, what you can do is you can trail your stop loss at least from cost to cost is way too much at this stage. You would have kept stop loss at least till 50% of this moment, but in either case you would have exited there, because that was the only target we have kept. So your target was around 120 points for this moment. Now if you remove all these lines and see till now market didn't form not even one single swing high. Okay, so I'm removing this also, and before removing that, let me write this 121 points. So here we have 121 points which is taken. Now I'll remove that. I'll remove all this. Now look downwards. You don't have a proper swing. See, this can be a swing low, but there was no swing high formed. At least till this level, at least there was no swing high. So it was a good chance that it was indicating that the market is in a strong downtrend, and you would have followed the trend and you would have made profit of this 121. But after that, this is the only place where, even though this is a kind of reaction of say 1 2 3 4 5 points, initially that was your level from where you have seen the rejection. So we have drawn that as our support. This is right away not a breakout, because one single candle cannot give us a confirmation of breakout. For that, you need to see a candle next to that also in the red color, which didn't happen there. And this position seemed to be maintaining pretty well today throughout the entire day. So this was reaction. Now we can draw a support area there, because prices for see from 10:55 till almost even till 1 o'clock also, this support, this area didn't allow prices to pass through this. So that would have been an excellent support area. And also you have seen a reaction here as well. We have seen a reaction, we have seen a hammer there. So that area would have been two times prices are getting rejected from the same level. At this stage, when the market is at this stage around 12:30, you would have safely assumed that this is your a very solid support area, because you have seen prices reacting from that area twice, and now wait for any reaction. If there is any chance the support area is giving, to take call towards the upper side. And here we have seen again the Harami pattern. In this case, we have seen a breakout above this real body. Okay, we have seen a breakout at 1 o'clock candle. From there, On the left side, your first target is this and your second target is this, but your risk versus reward ratio, if you check, if that is giving a good risk versus reward ratio, if you are planning your trade there, then your risk would have been just below there, and then your initial target from that position. Okay, on the left side, if you see, this was, even though, yes, it was a very risky trade because your first target is very close, but your second target was a pretty much giving you, but even still your second target is not giving you 1:1 risk versus reward ratio, so it's okay to let this trade go. Okay, you would have always been careful. You should always be careful with your risk versus reward ratio, only then take your trades. So whereas here earlier we have seen, visually the risk versus reward ratio is very huge because your risk is less and your reward is down a very a larger number compared to your risk, right? So here there was no trade, but at this stage you can draw, when your prices are there at 1 o'clock, you can see that the all this even till there is your resistance area, right? So this resistance area definitely held up very well all the way towards the end. Or you can say that, because this was, yeah, you would have drawn your resistance area till there, because that was this was a swing high. Don't worry, we'll learn what is swing high and low in our further videos. We will do entirely a dedicated video for a swing high and lows, because many of you still don't know if what a swing high and swing low is. We can learn it there. So that's it for today. See, because after this we have not seen any. See, here you have a reversal pattern, which is called a hanging man. This is a hanging man, and this is confirmation of a hanging man. But from there, your risk versus reward ratio is not looking very, very great. So it's okay to let that go. But if you see, all these are pin candles. All these are having a lot of wicks up and down, and the prices pretty much held within this area for the entire day. And since today was an expiry, and we have seen this kind of momentum at least towards the morning, but after that absolutely market has gone sideways. So for today we have seen, we were able to get, if this was the genuine chance according to our strategy inside harami candle strategy, this was the only point you would have taken a trade and made 121 points. So that's it for today. I'll see you in another post market analysis. Thank you. Please do subscribe for more such valuable post market analysis.